Alright, hi guys, welcome back to PKFX YouTube trading channel. So today is Sunday and the market is currently closed right now. So we will be doing our weekly game plan, and I have listed about 10 to 11 pairs, currency pairs that I'm interested in taking a trade for the upcoming week. So we'll go through one by one very quickly, higher level time frame, and see what is the potential trades that's lining up pair by pair. So we'll start off with NZD CAD. NZD CAD, this was one of our previous trade. So you can see the weekly was bullish. So this was our higher high and this was our higher low. The market retraced all the way down here and almost touched our higher low and made a significant push upwards. You can see the last 2 to 3 weeks, there has been a long wick in the candles. In fact, the last week, I would say this was pretty much an indecision candle. You can see a long wick down and also a long wick up. Weekly still remain as bullish. If I go to the daily chart, the daily chart is also bullish. This is your higher high, this is your higher low. And if I go to the 4-hour chart, the 4-hour chart is currently bearish. It's for sell, right? So right now this is the position of the market. In fact, if you are following up from the previous videos, you know this was our trade, right? This was our trade. We entered over here. The market went almost close to our TP, just 2 pips away from our TP, but the market reversed. So we ended up closing the trade at a break even. And I was saying we need to see how the market plays out, whether it goes back to our TP or it hits our stop loss. But if you see, if I extend this particular trade, if I were to hold this particular trade, it still wouldn't have touched our stop loss. But if you considered the overnight swaps and how the market has closed, probably when the market opens back on tomorrow, it's probably stopped out already. So I believe end of the day, this particular trade that we closed out at a break even was actually a very good move, because the market was not really buffering above. Right now the market is buffering below, very close to our stop loss, right? So with the spread difference, it would have definitely got stopped out. Now fast forward now, what can we expect for the upcoming week or the next few days? Since the weekly and the daily is bullish, I'm expecting a price movement upwards. The 4-hour is a sell. However, I believe we are still at the support resistance area, but I want to see a clear push of the opening candles to make it above here, above the support resistance, this area of interest, right? I want to see the 4-hour EMA play downwards like this, and the candles breaking above and then retesting the round psychological number of 0.8000, making both the EMA and the round psychological number and this support and resistance area as our potential base before it can make a move up. So if I see all that happening, then yeah, this is a potential trade. So that is NZD CAD. Now moving on to Euro GBP. So if I move to Euro GBP on a weekly basis, right? So now Euro GBP, this is also an interesting one. This was also our previous trade. The good thing you can see here, the weekly was a sell, all right? Market is currently making a retracement. The last candle, in fact, closed with a strong wick and it is pushing upwards. Now this can be a doji candle and get a immediate reversal, wick fill over here, bearish move as well. But I see a weekly EMA. Let me zoom in for you guys to see clearly. I can see a weekly EMA building up here. This is my support and resistance area of interest or zone of interest, or the trading zone that I'm interested in, right? The box. So the EMA is coming up as a support. The round psychological number of 86,500 is acting as a support. You have a strong wick upwards that has pushed the downward momentum into upward momentum, right? So I'm actually expecting the market to continue upwards before it has any sort of significant push downwards to follow the weekly trend. Now that is on a weekly. If I were to go to daily, right, if you can see here, the daily is a sell and the market has pushed upwards here. Now if you recall, this was our last trade, right? And I was saying that I will decide if I want to hold the trade, continue to hold the trade to a 1 to 3. This was supposed to be a 1 to 3 risk to reward, right? or shall I just close it off where it is when it was closing on Friday, right? And I actually closed it out at 0.86775. This yellow line is where I closed it out. The weekly is still a sell. The daily pushed towards a buy, right? Sorry, the weekly is a sell, the daily is a sell, but the daily has been having a strong upward momentum. I'll just correct myself. It's upward momentum. Why did I close? Well, if you see the daily EMA, right? On the contrary, the weekly EMA was downwards, right? The weekly EMA was down here as a support, but the daily EMA came in as a resistance, and I saw that it did not durably close above this box over here to act as my support, and it did not durably close above the EMA to give me confidence. Hence, I closed it. If I go to the 4-hour candlesticks, so the 4-hour, remember we discussed this point where it was creating like a bullish flag pattern or triangle pattern, that high probability to break upwards rather than downwards, and it did exactly that. But towards the end of market closure last week, it didn't really make a significant push from the previous high. This was the previous high over here. So you can see it just made slightly higher and created a new higher high and higher low. Now I can remove these lines, it's no longer valid for me. Now, this is not sufficient for me to continue to hold the trade. Now, when the market opens, can it continue to rally like how we predicted for a 1 to 3? Yeah, definitely the market can do whatever it wants. But if the market were to make a significant pullback to retest the previous structure points, right? And if the EMA continues to build upwards, at that point of time, I'll have a decision to enter back again, but I already secured the profits, right? That is the main goal over here. We want to lock in whatever the market is giving to us. So I believe this was a good trade, close to 1-to-1 risk to reward, plus minus, right? And the overnight spread was also building up pretty significantly. So this was a good decision to close out. If the market opens up somewhere down here, I'll try to make a new trade over here. I'll probably consider entering another trade, something like this. Will depend on what the market is going to give me, right? Something like this. But we'll see how it progresses as the market opens in the next few hours. Now that's Euro GBP. Moving on to Euro USD. Euro USD on a weekly, it is a sell. On a weekly, is a sell. Now this may just be a great opportunity. You can see here, weekly is a sell. This is your lower low, this is your lower high. And if I go on a daily, you can see daily is also a sell, right? The EMA is above. Weekly, the EMA is somewhere here. But you look at how the candle closed. The candle closed below the EMA. So the EMA can act as a resistance, right? Now, if I go to the 4-hour candlesticks as well, I see the momentum was very good. This is a sell pattern, right? Now, this particular trade, I would say the best entry point was somewhere around here when it broke this EMA. It could have just rallied all the way down here, right? It didn't range, the market didn't range. It made clear move to a lower high, lower low, lower high, lower low, right? Now, at any point of time, if the market decides to pull back, right, and come back and retest this area, right, this zone over here, this box, that would act as a good entry point for me. I would consider entering for a sell, because at that point of time, for the market to move up here, the 4-hour will change into a buy, but the weekly and daily will remain as a sell. And the moment I see a reversal from a buy back to a sell position over here, near the box over here, with the 1.1600 round psychological number acting as a resistance as well, now I'm going with the trend. So this is one trade that I'm looking into. If such a pullback happens, then I'd consider selling Euro USD, depending on how the market reacts when it opens. So that's Euro USD. Moving on to Euro AUD. Now, Euro AUD, this is pretty interesting. Weekly is a sell. It has been a tremendous sell rally. You can see here how many candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Literally 3 months, right? Literally 3 months, it has been pretty much crashing downwards. And now finally, it has found a bottom, and the last 2 weeks it has been making a corrective move upwards. Now, the corrective move could be done because it has reached my area of interest over here, this zone, this box over here, where I see significant structure points that can act as a resistance. However, the move here for the past 2 weeks has been strong, and the EMA is still way above. The weekly EMA is still way above. So I'm expecting probably this zone is not going to hold, and it's going to keep going upwards. And if I look at the daily candles have been printing significant upward moves. Now, any break, let me zoom in for you guys, any break above this box and a retest and a push upwards will indicate to me that the momentum is going to keep going upwards, mainly when the EMA is coming down as a support, right? The round psychological number 1.6800 is going to act as a support when it breaks above this box and comes back and retests. And then the 4-hour candlestick as well is moving upwards. So I have the daily and the 4-hour, which can have a big effect to our immediate candle movements. If all of it is lining up nicely like this may just be a good entry. And I want to, you can see here, the risk to reward is almost 3.57, but I definitely want to get out before I reach this weekly EME. I don't need to hold all the way up here because probably you may have a reaction near the weekly EME. So that is Euro AUD. Moving on to AUD CHF. Now, AUD CHF. Okay, let me just zoom this one. You can see AUD CHF has been making a very nice higher high and higher low, higher high and higher low. So right now we are here at this particular area, higher high, higher low, and it's retesting the previous structure point as well. So generally looking at the previous structure, I'm expecting the next higher high. Now, this one is pretty risky because has it had a significant pullback? Not yet. The EMA is pretty far away as well, so it can definitely pull back. But looking at this pattern and depending on how the candles are going to open, I will see if there are chances for the market to make a push upwards. If I see the daily is a sell, right? The daily is a sell, but the daily EMA is coming in here as a support. Now, the 4-hour candlestick is also a sell. You can see here, this is your higher low, this is your lower high, and this is your lower low, right? So this could have just been the lower high, and the market can just trend downwards lower low. So it could invalidate our thesis, our prediction or our thesis over here. But see that the EMA for the 4 hours also coming down. So at any point of time when this candle opens, if the candle decides to close above this 0.55 thousand round psychological number, above this box, which is our zone of interest, and above this EMA structure as it builds through, now you have 3 things that you can layer upon to say this is going to act as my base to keep pushing upwards. You got to understand that for this trade to play out, it has to pass through another area of resistance over here, this box, before it can reach its TP. So not so ideal compared to the previous trades, but this is also another trade that I'm looking at. Moving on, GBP AUD. Now, GBP AUD, the weekly candle is pretty much a buy. Now, how did I get this as a buy? Because I see here a significant rundown, right? But when the market reached over here at this particular candle, it stopped over here to make another structure before it made the new lower low. So I considered this point as the lower low and this point as the lower high, and this candle last week broke the lower high, making a new higher high. So this is my higher high, this is my higher low. Now, this really depends on perspective of the traders. For me, this is now just recently turned into bullish. But for some people, they do not see this structure point. They would prefer this structure point over here because the candle has only been going down until it reached this point. So if that is the case, the weekly is still in a sell, right? Now, either way, whether you consider the weekly as a buy or the weekly as a sell, right? We can clearly see that it had a significant crash And right now, the last 2 weeks, the market has been pulling back with a good upward momentum. So I am expecting a buy over here. The daily has been rallying, same like the previous chart that I showed you. The 4-hour has also made a higher high and came back down to retest this box. Now, any break above this box and the smaller time frame starts to shift their structure from a sell to buy, then this particular market is offering me a 1 to 4 risk to reward. So this could be a good trade as well. I want to see how the market opens and then we'll decide how to go forward with this. Moving on, GBP CAD. Now GBP CAD on a weekly, this is the this is the lower low, this is the lower high. So this is a sell, weekly is a sell. And you can see the EMA is coming over here in the market, the candle just slightly closed above the EMA. It can always reject back again when the market opens back tomorrow. Now, daily is a buy, okay, and you can see that the daily candle pretty much stopped right above this, and the 4 hours is a sell. Now these candles, right, you can't really say how the trade is going to go, because you see the weekly is a sell, the daily is a buy, the 4 hours is a sell. So usually when it's a bit confusing like this, I would rather wait to see a day or two what the candles are printing out before I can decide how do I go about with this, right? But because the EMA of the weekly is coming here, and if I see the candle, next candle printing out a bit bearish, then you may just have a chance to start selling for this particular trade. But for that to happen, the 4-hour EMA shouldn't act as a support as well. So this is a trade that I'm looking at, not extremely excited or interested with, but we'll see how the candles evolves as the market opens, and we'll decide accordingly. Okay, so next up is AUD USD. AUD USD, pretty straightforward. You have weekly buy, right? And you have daily sell, right? You can take the lower low here, you can take the lower low here. This is also a structure point, this is also a structure point, but I do see a movement all the way up here before a significant turn. So this would be my lower low, sorry, this will be my lower low, this will be my lower high, right? This was my previous lower low, this was my previous lower high. So the market has been trending downwards on a daily basis. And the 4-hour candlestick, the market is technically at a sell, just recently went to a sell, right? So this will be lower high and this will be lower low. So because the 4-hour and the daily has lined up to a sell, any push upwards, I would expect to sell to follow this counter trade trend. Why do I say counter trade trend? Because the weekly is still a buy, and weekly is pretty much having an extremely good pullback. So I expect some sort of a small move up here, at least to this zone over here, this box over here, before it makes its major continuation of a run upwards later on, right? So for this to happen, I believe we still have a little bit of push downwards. Now, does it have to actually do that? We know, not necessarily. When the market opens, the candle could literally, all we know, it could literally just push upwards, right? Hitting the stop loss. That's why it's very important not to immediately enter. When the market opens, we allow the Asia session to play out first, let the London session to come in, let the volume to come in, and then it will give us a clear indication where exactly the candlesticks are going, how exactly it's printing out. So this is AUD USD. Now I'd like to move on to the next one, which is CAD JPY. CAD JPY, I see the weekly is bullish, right? Daily is also bullish, right? So we have weekly bullish, daily bullish. We want to go with the trend. 4 hours currently is a sell, had a significant retracement, and now it's continuing to sell. I see we have a round psychological number at this box over here. 115 will be our round psychological number. So any movement down here, right, I would like to enter for upward movements to follow the trend. I gotta understand that the EMA is still gonna act as a resistance for me, and if I were to go and check out the daily chart, let me just drop the lines over here so that you can clearly see that. So if I extend the higher high and higher low, you can clearly see that the market had a reasonable pullback, right? So 115 will act as a round psychological number, and the daily EMA is coming up as well. So I'm hoping that by the time it corrects all the way down here, this will be a good entry point for the market to continue to rally upwards. We got to understand that it has to pass through this another box that I've drawn over here, another zone of support and resistance. And as the market comes down here, and if we are buying down here, when it starts moving up here, this is now going to act as a resistance. So it has to break through before it can make the 1 to 2 risk to reward. So not so keen, but keeping an eye as well. Moving on, USD JPY. Now USD JPY, if I look at it on a weekly perspective, it is a buy. It is a clear buy. In fact, if I really zoom out, it is almost at its higher high. So usually we do not want to trade a market that is almost at a higher high, because we really don't know how high can it keep going, or at which point of time, like the previous, if you see the previous higher high when it was here, when will it suddenly just crash, suddenly just make a massive pullback like this? We can never predict that. So ideally, you do not want to trade a market that is already at a higher high. However, having said that, I can see that the weekly is bullish, the daily is also bullish, and the 4-hour candlestick, okay, has broken out here and just recently made a new higher high and higher low, as you can see over here, right? So for me, this candle has not stopped and has been pushing and pushing and pushing. And I know that with the current war and whatever that's going on right now, USD is getting weaker, but Japanese yen is definitely getting more weaker than USD. So I'm expecting the USD to still be stronger than the Japanese yen. So any sort of pullback over here may just be a good buy. But I'll do that if the EMA for the 4-hour comes up here and acts together with the round psychological number as a base as well. And if I zoom out to see, the daily EMA is still far away, so it can always kill me off. So it is a risky trade. I would say, do your due diligence, see if things lining up and you have more confluences, more things to say, hey, these are the reasoning in why the probability of the market to move higher is more than the probability of the market to move lower, then this would be a good trade. And you can easily get a 1 to 2 risk to reward over here. The final pair would be Euro JPY. Okay, so Euro JPY, if I were to check this nicely, this was making higher high, and then this particular long candle over here broke down. So weekly became a sell, and the market had been moving upwards or more of a retracement lately. Okay, daily, the daily, you see here, this was the lower high and this was the lower low, and ever since then the market has been ranging and ranging, right? The daily EMA is still below here at this box, right? The round psychological number I can find here near to our current trade point, right? The market is actually in the zone of interest, so we can expect the market to continue its momentum upwards when the EMA 4 hour starts coming in as well. But this is a risky trade, because I would say the weekly and the daily is a sell, only the 4 hour is a buy. So this is technically a counter trade trend. Ideally, you want to go with the trend, not against the trend. And even if you zoom in, you see that from the daily, right, the market has already made a significant pull. So it doesn't need to keep pulling upwards before it continues its trend upwards, downwards, right? Anyhow, like, we will see how the market opens. End of the day, the key over here is we do the game plan, we check our zones, we check what is it doing weekly, daily, and 4 hours for each and every pair, okay, on Sundays, just to see where the market is. And then we allow the market to open, we allow the Asia candles to print, we allow the London sessions to probably about to start or start. That would be a good point where the volume will start picking up and the candle would have pretty much formed some candlesticks, which can give you an idea whether is it going to go up or is it going to go down. And we got to always remember that for each and every trade that we're taking, the moment the candle opens, it could literally just blow off our stop loss and keep going the opposite of whatever that we planned for. Now, that's actually a good thing, because if we have 11 trades out here, right, out of the 11, we are probably going to take 1 or 2 or most 3 trades a week if we have all the things lining up to our strategy, right? So the rest has to go opposite of our direction for us to say, you know what, I'm not going to take this trade has passed, this trade is not working out as per plan. So that allows us to filter. So we'll see how the market opens, and make sure that you guys, not a financial advice, take this as entertainment purpose. Do your own due diligence and have fun, guys. Thank you so much for your attention, and good luck for the upcoming week, guys. Thank you.